Hi all, good morning, good afternoon. See, yesterday we have discussed the slab rates, surcharge rates and even the special rates. So 2 minutes, we'll have a quick recap of what we have discussed yesterday. See, I hope you all remember the slab rates under 115 BAC, the new regime. 0 to 3 lakhs, nil for individual HUF, AOP, BOI and AJP. 3 to 7 lakhs, 5%, 7 to 10 lakhs, 10%, 10 to 12 lakhs, 15%, 12 to 15 lakhs, 20%, in excess of 10 lakhs, 30%, in excess of 15 lakhs, 30%. So now, exactly at 10 lakh, exactly at 15 lakhs, what is the tax liability? 1,40,000. Then we have discussed surcharge rates there also. So surcharge rates up to 50 lakhs. Total income up to 50 lakhs, nil. Surcharge has to be levied on income tax. Okay, 50 lakhs to 1 crore. 1 crore to 2 crores. Above 2 crores. 25%. Then we'll come to the old regime. Under old regime, individual HUF, AOP, BOI and AJB, assuming individual is not a senior citizen or super senior citizen who is being resident. Okay. So then what are the slab rates? Up to 2.5 lakhs. 2.5 to 5 lakhs. 5 to 10 lakhs. 20%. In excess of 10 lakhs. 30%. Now exactly on 10 lakhs, what would be the tax liability? 1,12,500. Then for senior citizens. For senior citizens, up to 3 lakhs, nil. 3 lakhs to 5 lakhs. 5%, 5 lakhs to 10 lakhs, 20%, in excess of 10 lakhs, 30%. Then super senior citizens up to 5 lakhs, nil, 5 lakhs to 10 lakhs, 20%, in excess of 10 lakhs, 30%. Exactly at 10 lakhs, it would be 1 lakh. Okay. Then surcharge rates applicable to individual HUF, AOP, BOI and all. Sir, for senior citizens, I said like, to get that additional basic exemption limits, they should be residents and the age should be checked on 1st April of assessment year. Surcharge rates applicable in case of individual HUF, AOP, BOI under the old regime. What are the surcharge rates? Up to 50 lakhs, nil. 50 lakhs to 1 crore, 10%. 1 crore to 2 crores, 2 to 5 crores, 25%. Above 5 crores, 37%. Okay. Then we have discussed about marginal relief also. Are you able to remember marginal relief, sir? How do we compute marginal relief? Very simple. Let me tell you. Let me again to get it clear. In the question, first we need to check whether the total income is nearer to that of surcharge limits. Nearer na, somewhat like take it as like some 10% difference. 1 crore up to 1 crore 10 lakhs na, then it is nearer. 1 crore 20 lakhs, 1 crore 30 lakhs, all those cases we need not to check. When it is nearer to surcharge limits, then take the total income and calculate tax plus surcharge. Don't include cess, only tax and surcharge. Then step 2, we'll identify the nearest surcharge limit. If the total income is 2 crore 1 lakh, then what is the nearest surcharge limit? 2 crores. If it is 51 lakhs, 50. If it is 1 crore 3 lakhs, 1 crore. So on that nearest surcharge limit also we'll calculate what? Tax plus surcharge applicable. Then third step we'll do what? The difference between the given or the question related total income or and the nearest surcharge limit. Between them the difference will be identifying. So we got step 1, step 2, step 3. Now marginal relief is 1 minus 2 minus 3. Then you will get the marginal relief. But the question is not at all over by just calculating the marginal relief. Our ultimate objective is to find out the tax liability. Tax liability, how do we calculate? From the step 1 tax liability, reduce marginal relief, you will get the tax liability excluding cess. Excluding cess. On that again we should levy what? Cess at a rate of 4%. Then we have discussed about rebate. Sir, when rebate is applicable, to whom rebate is applicable? Only to a resident individual rebate is applicable. Okay. Under new regime, under old regime. Old regime, very simple, sir. 12,500 or tax payable, whichever is lower is the rebate. It is applicable only when the total income na gross or net, net total income is less than or equal to 5 lakhs. Then under the new regime or the default regime, it is applicable when the total income is up to 7 lakhs. When the total income is up to 7 lakhs. Up to 7 lakhs now, what is the rebate applicable, sir? 25,000 or tax payable, whichever is lower. 25,000 or tax payable, whichever is lower. But there is a new amendment, sir, in Finance Act 2023 that was brought, not 2024 Finance Act. And 1 year back, it was introduced. So what? Even on this total income, even on this rebate also, something kind of marginal relief concept has been came. So how do we solve that? First, we'll find out the difference between the given total income and 7 lakhs. Then step 2, we'll find out the tax liability on given total income. Then we'll check whether step 2 is greater than step 1. I mean, the incremental tax is greater than incremental income. That we'll check. If incremental tax is only more, then we'll find out the difference between them. That would be given as rebate. That would be given as rebate. So let us solve with an example, then we'll go to the other topics. Compute tax liability of Mr. Dinesh, 20 years, has the following incomes. Under both the regimes. Under both the regimes. Income from house property computed ₹3 lakhs. Income from house property computed 3 lakhs. Then PGBP income. Again, that also take it as like what? Assume as like what? Computed only. Then long-term capital gain under 112A. After 23rd July 2024 only. 2 lakhs. After 23rd July 2024 only. 2 lakhs. Short-term capital gains under 111A. This is also will take it as like after 23rd July 2024 only. 1 lakh. Lottery income 75,000. Net of, sorry, 1 second, sir. Lottery income will take as only 70,000. This is net of TDS. Because when they are paying lottery, usually they'll deduct TDS. So the amount we got is what? Net amount. Okay, so on this we'll be calculating the tax liability. So first of all, this net amount lottery income, we should make it what? We should take the gross amount. So on lottery, the TDS rate is 30%. So this 70,000 we received is only how much? 70%. So we should make it to the 100% and then we shall calculate the tax liabilities. Okay, so we'll do together, sir. So first I am doing under the new regime or the default regime. Computation of tax under default regime. Computation of tax under default regime. Income from house property. Sir, need not to write everything fully also. So we could write a shortcut also. 3 lakhs. Then they given what? PGBP. How much, sir? 2 lakhs. Then we got long-term capital gain under 112A, short-term capital gain under 111A. How much these amounts are like? 2 lakhs. Sir, I am not taking 2 lakhs here. What I am doing now, under long-term capital gain under 112A, under new regime, there is an exemption, sir. New regime or old regime, there is an exemption. What is the exemption, sir? 1,25,000 is exempted. So that's why I am taking what? Straight away only 75,000 only I am taking. Then short-term capital gain under 111A. How much, sir? 1 lakh. Then lottery income. How much lottery income? 1 lakh. So now we'll be doing what? Gross total income. How much is the gross total income, sir, here? 5 lakh, 75, 6 lakh, 7 lakh. 7,75,000. There are no chapter 6A deductions given. Okay, so gross itself is what? So chapter 6A, I am writing here if anything is there, but here nothing is there. So we'll got what? Net total income also 7,75,000. Now, while computing tax here, we have special rate incomes as well as normal rate incomes. So first we should compute tax only on normal rate incomes excluding special rate. Okay, excluding special rate. Now you should subtract what? 2,75,000. So I'm writing here tax on normal incomes. How much it is like? 5 lakhs. On 5 lakhs, what would be the tax liability, sir? 5 lakhs only, na? Yes, 5 lakhs only. 3 and 2 only the normal rate taxable incomes. 5 lakhs. Sir, we are under which regime? New regime. So 0 to 3 lakhs, nil. 3 to 7 lakhs, 5%. How much is there in between 3 to 7 lakhs? 2 lakhs is there. So what is the tax liability here? 2 lakhs into 5%. 10,000 is the tax liability here. Tax on normal incomes. Then we should calculate tax on 112A income. Sir, on 112A income, how much, sir? 75,000 into what is the tax rate? 12.5%. So how much? 75,000 into 12.5% means 9,375. Okay. Then tax on 111A income. So what is the tax on 111A incomes? 20%. So it is how much? 1 lakh into 20%. How much? 20,000. Then lottery income. Okay, 1 lakh into 30%. How much it is? Like 30,000. So what is the tax liabilities are here? 69,000. 69,375. Plus on this we need to add what? HEAC, cess at a rate of 4%. How much? 2,775. What is the total? 72,150. Okay. Sir, for now it is done, but actually what we should do means this 72,150 will not pay. Already 30,000 TDS deducted, na? So we'll adjust 30,000 and then effectively how much will pay? 42,150 only will be paying. Okay. If any TDS, TCS, advanced tax are there, that will be adjusting. So, okay, I don't have any. The page is going to end. Even if I write in the next page, it won't be good. You write there. Okay. Under this tax payable, next column write down minus TDS, TCS or advanced tax. This is the tax liability. Minus what you should do? You should do the TDS 30,000. TDS, TCS, advanced tax. Then the effective tax liability how much? 42,150. Now the same one, sir. Quickly solve it from the tax only, because the total income remains same under the both the regimes. Total income remains same. So calculate tax under the normal regime, or sorry, under the old regime as well, because we already calculated in the default regime. Calculate the tax liability even in the old regime as well quickly. Only the tax, because net total income remains same. So what is the tax on normal income? 12,500. Okay. Tax under the old regime. Net total income remains same. How much is the net total income? 7,75,000. So first we'll be calculating tax on normal incomes. 5 lakhs. So what is the tax, sir? 12,500. Except this, nothing will change. Okay, so it would be how much, sir, here? 112A income, 111A income, and then lottery. On 111A income, what is the tax liability, sir? 10,000. Sorry, 112A how much, sir? 112A related 9,375. Then 111A 20,000. Lottery 30,000. 71,875 plus HEC at a rate of 4%. How much? 2,875. So the total tax liability is how much? 74,750. Okay, minus TDS, TCS, advance tax. How much we are having, sir? TDS, TCS and advance tax we are having 30,000. So if you subtract 30,000, then the liability is how much? 44,750. 44,750 is the tax payable. Tax liability is different, tax payable is different. Sir, even in this case also we can understand like default regime is far better. Because 0 to 3 lakhs we are having 50,000 extra basic exemption limit, and 3 to 7 lakhs it is only 5%, and under the old regime 30% slab starts only from 10 lakhs only. But here it starts from where? 15 lakhs. So in any way default regime seems to be better. Okay, so then why they need to give about, or why there should be a old regime actually? Everybody, if new regime is clear cutly it is better, na? Then why they should continue the old regime completely? They can scrap it, right? So there are other points which we need to consider. It's not just purely on tax computation. Okay, total incomes itself will not be same in the old regime and the new regime. Here in our case, the total incomes are same. That's why we feel like which is better, new regime is better. But if but under the new regime or the default regime, we'll be not able to claim certain deductions, certain exemptions and all. So the total income under new regime will be comparatively higher than compared to the old regime. Okay, that's why it differs case to case. In some cases it would be better in the new regime, in some cases it would be better in the old regime. Okay, we'll discuss all those also, but before that first we'll go to the we have completed, sir, now individual related tax calculation we have did, surcharge calculation we have did, special tax rates we have understood, rebate we have understood. So now we can go into the companies related. Okay, well now we'll write down about the companies related. Tax rate applicable to companies. Assessment year 25-26. Sir, for companies there will not be slab rates and all, the tax rates would be what? Flat. So I'm taking 3 columns, sir. Particulars, tax rate, and even we can take together the surcharge as well. First one, sir, normal regime. That also domestic companies. For foreign companies, anyhow, there is no differentiation, sir. Normal regime and default regime, all those will not there. Only for the companies, there is such option. Normal regime, and the company we are discussing is about what? Domestic company. Domestic company means what? The company which is incorporated in India. Turnover in previous year 23-24. Turnover in previous year 23-24 is less than or equal to 400 crores. Sorry, one correction, sir, correct it. Previous year 22-23 is less than or equal to 400 crores. It's not 22-23-24, previous year 22-23. If the turnover in previous year 22-23 is less than or equal to 400 crores, then the tax rate is 25%. Then the tax rate is how much? 25%. Then let me write down the other case also. Turnover in previous year 22-23 greater than 400 crores. Then the tax rate is 30%. So for domestic companies under the normal regime, there are two options. Sir, normal regime only default for companies. Understand? Okay. Only for individual HUF, AOP, BOI and all, the previous normal one has become now optional. The new regime has become the default one. But for companies, this is the old regime only. What we have discussed is nothing but old regime only. That itself is the default regime for companies. Okay. So this itself is the default. So turnover in previous year 22-23 is less than or equal to 400 crores. The tax rate is how much? 25%. Why the tax rate has been cut down to 25% also? There is a lot of background behind it, sir. Understand? Simply I'll tell. See, say in any developed country, the income tax would be less or nominal, or there will not be even income tax at all. Okay. Why the point is like, sir, usually direct taxes will, when a person is paying direct taxes, he knows the pain. So when a person knows the pain, it would be working against the, he'll have something negative towards the negative mindset towards the government because he's paying so much of taxes. Okay. That's why if at all the government has enough money and they want to cut down one tax, they'll be cutting down income tax only, not indirect taxes. Why not indirect taxes? Because in indirect taxes, the pinch is not known to the customer. It's okay. The same person, sir, he bought a 30 lakhs worth car. There also 10 lakhs went for tax only. GST, compensation, all those things will go. 10 lakhs went for tax only. But still he'll not feel the pain. But the same 30 lakhs, but the same person, if he has 30 lakhs salary and out of that 10 lakhs has been taken as tax, then he feels the pain more. So that's why, if at all it is a developed country, then they don't need much funds. Developed country, already the people's per capita income is more. So they need not to give these free schemes and all. Need not to give the housing related loans and all. Need not to provide the food facilities and all. Okay, and developed country means already infrastructure is there. They already laid roads, they already laid airports, constructed airports, ports, everything is already built. So they need less money. That's why they don't want much taxes. So they'll cut down income taxes slowly as a move to reduce our income taxes also, as a step to counterbalance our tax rates with all the developed countries. Okay, it's not like we are just aligned with other countries, but as a step. okay, to align with the developed countries' tax rates, they have started to reduce the tax rates, direct tax rates. And the first step is like for small companies, they want to reduce the tax rate to 25% from 30%. Initially, this 400 crores they kept as 25 crores. I mean, for the companies within 25 crores, there used to be 25%, then 50 crores, then 200 crores, then they have now made it to 400 crores. I mean, the scope is being extended, okay, slowly. Because at a time, if they bring our revenue will get affected and the government cannot be run. That's why, okay. So now coming to the surcharge, sir, total income, okay, under both the cases, sir, total income less than 1 crore or equal to 1 crore, nil. When it is between 1 crore to 10 crores, 7%. Greater than 10 crores, then 12%. Up to 1 crore, nil. 1 crore to 10 crores, 7%. Greater than 10 crores, then it is 12%. Again, here also, if surcharge comes, marginal relief will come. Okay, we'll do the example afterwards, but let me finish off the optional regimes also. Now, optional. Section 115 BBA. Section 115 115 BBA, not 115 BA. Section 115 BA. Then the second one is like section 115 BAB, BAA. And the third one is like section 115 BAB. Like this, we are having 3 rates, sir. But all these 3 we'll discuss afterwards as well. Okay, so this is a domestic company. 115 BA, sir. Domestic company which is into manufacturing. Domestic company which is into manufacturing. Then 115 BAA, any domestic company. Any domestic company. 115 BA is for domestic company which is into manufacturing. 115 BAA is for any type of domestic company. Let's say BCCA is floated as a company. Okay, can it opt under 115 BA? No, because it's not into manufacturing, it's into service sector. So it can come under only 115 BAA only. Then 115 BAB, sir, again domestic company which is into manufacturing. So now you'll have usually a doubt, when there is already 115 BA, then what is the purpose of having 115 BAB? 115 BAB is much more advanced one, sir. Okay, for the newly formed manufacturing companies. Okay, so newly formed manufacturing companies in the last 4 years till 31st March 2024, from 2019 to 2024. In this 5 years period, the company might have been started and it is into manufacturing, then it can opt under the 115 BAB. Okay, so your company started somewhere in 2004. You cannot come under 115 BAB. You will be under the where? 115 B only. You started recently, 1 month back only. Then also you will be under 115 BA only. Okay. So 115 BA, 115 BAA, 115 BAB. So what are the tax rates are here? The tax rate under the first one, 115 BA is like 25 percentage. 25 percentage. Whereas here it is like 115 BAA, it is like 22 percentage. Then the third one is like 15 percentage. Under the first case, sir, 115 BA, the surcharge remains same. That means greater than 1 crore, 7 percentage, greater than 10 crores, then it is 12 percentage. It remains same under 115 BA also. It remains same. Domestic company which is into manufacturing, the tax rate is 25 percentage and the surcharge rates like greater than 1 crore and up to 10 crores 7 percentage, above 10 crores 12 percentage. Then 115 BA for any domestic company, the tax rate is 22%, but whereas the surcharge rate is 10% fixed irrespective of income. This 10% surcharge is fixed irrespective of income. How much ever the income they have, on the tax has to be levied at 22% and surcharge also has to be levied at a rate of 10 percentage. Whereas here also the surcharge rate is 10 percentage fixed. Sir, in the first three cases, surcharge may come, may not come based on the total income. But in the last two cases, even though total income is only 20 lakhs, but still 10% surcharge is applicable. Even though total income is 5 crores, the surcharge is how much? Sorry, even though the total income is like above 10 crores, but still the surcharge is fixed to what? 10 percentage only. Then for foreign companies, sir. Then for foreign company, the tax rate is 35 percentage. Then for foreign company, the tax rate is 35 percentage. And the surcharge rate, sir, greater than 1 crore, less than or equal to 10 crores. I mean 1 crore to 10 crores, the range. Then the surcharge rate is 2 percentage. Then greater than 10 crores, then the surcharge rate is 5 percentage. So now let me take an example, sir. We'll do marginal relief from company perspective as well. ABC Private Limited has the total income ABC Private Limited has the total income of 1 crore 1,50,000. 1 crore 1,50,000. Its previous year turnover, previous year 22-23 turnover Previous year 22-23 turnover equals to 200 crores. ABC Private Limited has the total income of 1 crore 1,50,000, whereas the previous year 22-23 turnover equals to 200 crores. Compute tax liability. Compute tax liability. Under 115, under normal regime. Under normal regime. So again bracket I am keeping excluding cess for assessment year 25-26. Sir, you calculated, huh? So step 1, what we'll do, sir? Sir, here there is a chance of marginal relief. So we'll calculate what the step wise. Step 1, tax on 1 crore 1,50,000. Tax now, it including what? Tax plus surcharge. So on 1 crore 1,50,000, what is the tax rate, sir? 25%. 1 crore 1,50,000 into 25%. Plus what is the surcharge rate? 7%. How much? 27 lakh 15,125. Then step 2, sir. Tax on nearest surcharge limit. Now what is the nearest surcharge limit? 1 crore. So tax on 1 crore. How much, sir, it is? 1 crore. On 1 crore will there be surcharge? No. Above 1 crore only there is surcharge. So on 1 crore, it would be 25 lakhs only. $25 lakhs. Then step 3. Step 3, what we should do, sir? The difference between total income 1 crore 1,50,000 minus 1 crore will do. The given total income and the nearest surcharge limit will do. How much, sir, it is? 1,50,000. Then step 4 will calculate what? Marginal relief. What is the marginal relief here? Marginal relief, step 1 minus step 2 minus step 3. How much it is? 65,125. Okay. Then we'll be calculating the final steps are step 5, tax payable. The total tax liability. How much is the tax liability, sir? Step 1 minus step 4 if you do. How much, sir, it is? 26,50,000. 26,50,000. Sir, again understand the special rates are applicable even to companies. Special rates are applicable even to companies. If company has 112A income, then it is taxable at what rate? 12.5% only. 111A income, taxable at 20% only. So the special rate incomes are applicable even for companies. For all the kinds of SSEs, those are applicable. Then we are now moving on to societies. Tax rates applicable to societies. Tax rates applicable to cooperative societies. Tax rates applicable to cooperative societies. So again, here also there are two regimes. There is normal regime and there is even an optional regime. So under normal regime, sir, so again 3 columns I am taking. Here it is like tax rate and then the last column is like surcharge rate. Tax rate will take and will take surcharge rate as well. Where the income is up to rupees 10,000. Where the income is up to 10,000, then the tax rate is 10%. Where it is like 10,000 greater than 10,000. Greater than 10,000 to 20,000. Greater than 10,000 to 20,000. The tax rate would be 20%. The tax rate would be 20%. Whereas if it is more than 20,000, then it is 30%. Up to 10,000, 10%. Up to 20,000, 20%. Up to 30,000, 30%. Sorry. Above 20,000, here it is like 30% only. The surcharge rates are the same as like almost like companies only. Okay. For all those three, like together only, the surcharge rate is like how much? Up to 1 crore. Nil. Greater than 1 crore. But less than or equal to 10 crore. It is like 7%. Greater than 10 crores, then the rate is like 12%. Greater than 10 crores, then the rate is like 12%. So then we'll be moving on to the D for optional regimes. Optional regime. Optional tax. Optional tax. So under optional tax, 115 BBD. Under optional tax, 115 BAD, not BBD, 115 BAD. Hundred 15 BAD, sir. Here it should be a resident cooperative society. Resident cooperative society other than that covered under 115 BAE. If it is covered under 115 BAE, then it is different. So here any cooperative society which is resident other than 115 BAE. Then the tax rate is, sir, here straight away the tax rate would be 22%. The tax rate would be 22%. And the surcharge rate is also 10% fixed. 22% and 10%. Then 115 BAE, that is for the cooperative societies which were into manufacturing. 115 BAE, cooperative societies which are into manufacturing. Cooperative societies which are into manufacturing. Plus two conditions, sir. Registered on or after 1st April 23. Registered on or after 1st April 2023. And business started, and their business should be started before 31st March 2024. That means effectively within that 1 year only, 23-24, they should have commenced that cooperative society. Registered on or after 1st April 2023. But the business should have been commenced before 31st March 2024. Then in that case, the tax rate is only 15% on the surcharge rate at 10% fixed. Sir, under this 115 BAD, 115 BAE, I mean, the places where surcharge rate is fixed, there, including cess also will calculate a together rate. That also will write down. Okay. So, come back here, sir. See, here if you see 115 BAA, there, any domestic company, what is the tax rate? 22%. Surcharge rate is how much? 10%. So, now, we'll find out a cumulative rate as well here. 22%, on that again levy 10%, 2.2%. So total how much? 24.2%. Together again levy cess as well, 4%. So here how much? 25.168%. So this is a cumulative rate, including cess. Okay, sometimes they can ask directly MCQ and the option would be straight away 25.168. So you should not get confused again. So here, why we are calculating like this? Because here surcharge rate is fixed anyhow. But whereas in the first cases, above cases, surcharge rate is not fixed. So we cannot conclude like this is only the rate. But whereas here, surcharge is fixed, cess is fixed, tax rate is also fixed. So straight away we can take even 25.168% also. Next, second case, sir. Tax rate is how much? 15%. On the 10% na 1.5. Total 16.5. And again on 16.5, 4%. 17.16%. Then here for cooperative societies also calculate, sir. 22% plus 10% plus 4%. 25.168%. 25.168%. And the next one is like 17.16%. %. Sir, we have discussed about now as of now individual, HUF, AOP, BOI, AJP, company. So the things pending are like only related to firm and local authority. So okay, there are nothing like firm and local authority. There is no default and optional. There is only one particular tax rates are applicable. So we'll finish off that also. Firm and local authority. Firm including LLP and local authority. Firm including LLP and local authority. Firm including LLP and local authority. So it's only flat rates, so there is no slab rates available. Tax rate equals to 30% flat. Again, surcharge rates. Surcharge rates, like if they are like total income, surcharge rate. Total income up to 1 crore. Nil. Greater than 1 crore, 12%. There is only one surcharge rate, sir. Greater than 1 crore, it is straight away 12%. Greater than 10 crores also 12% only. Okay, so now we have finished off the tax rate, sir. So tomorrow, sir, I'll take 2 hours class so that we'll completely finish off the first chapter. I mean, the topics to be discussed in the basics chapter are like some basic theory points like what is called average tax rate, what is called maximum marginal tax rate. Okay, those all are like 2 minutes concepts only. Then we need to discuss a theory part regarding undisclosed source of income. What I mean, those cash credits, unexplained investments, unexplained expenditures, that particular point. Then very briefly, usually the previous year income will be assessed to tax in the assessment year. That's the general rule. But there are certain exceptions to the general rule. You learnt in the inter level only. Non-resident shipping business, whereas AOP, BOI formed for a purpose and the purpose has been accomplished. Okay, where you are going for employment outside India. So in those cases, the current year related income assessment will be carried out in the current year only. So okay, some basic discussion. That part, and mainly, sir, we need to complete 115 BAC related. PGBP anyhow will discuss again together, I mean, elaborately we'll discuss PGBP. It's okay, I'm not worried about PGBP then. But house property, salaries, these chapters we are not going to discuss again at the final level. But the problem is, when they ask 115 BAC, they're asking a basic tax liability question, 7 marks question. There, these house property adjustments or salary adjustments will come. So we'll have a basic comparison. Okay, if you opt 115 BAC, under salaries, what exemptions you are not able to avail? Under house property, can you avail interest deduction or not? Can you avail standard deduction or not? So those basic points under house property, if you avail 115 BAC, what you are going to lose? If you are under normal regime, what you are going to get? So, okay, those comparatives we should discuss. Okay, so for 115 BAC only, 1 hour it will take tomorrow. So the other 1 hour to complete all these topics. So anyhow, tomorrow Saturday, no? So we'll take 2 hours class. Then the first chapter we could have finished in this particular week. Okay.